So for those out there who are looking to get a mortgage loan with Navy Federal Credit Union, specifically the one where you don't have to put any money down, I got you. In this video, ladies and gentlemen, we're going to talk about what the requirements are in order to get a mortgage loan with Navy Federal without putting any money down, and then I'll talk about a few things you guys need to look out for. If you're already subscribed, then welcome back. But if you guys are new to my channel, my name is Ismael Sandiford, and you are now watching Just Money, where we talk about financial related topics such as personal and business credit, real estate, and other financial related topics. So if that's something you're into, then you're probably going to want to consider subscribing. But without further ado, let's get into today's video. Okay, so Navy Federal Credit Union has a mortgage loan that you guys can get with them that allows you to purchase a home without putting any money down. The name of this mortgage loan is going to be called the Homebuyers Choice Loan, and this is actually a type of conventional loan that Navy Federal is offering. They do have other conventional loans that they offer, and even VA mortgage loans specifically for people who are in the military, but one thing they do not offer is FHA loans. Now in this video in particular, we're only going to be focusing on the mortgage loan that anybody can get with them if you bank with them that allows you to put no money down when buying a home. So let's talk about it. So for starters, typically when you guys want to buy a home, you're going to have to save up for a down payment, closing costs, and even something called reserves. And if you don't know what any of those are, let me break it down for you really quick. Depending on what mortgage loan you guys get will determine the down payment that you guys are going to have to put down. There's mortgage loans out there to where you don't have to put anything down, but at the same time too, there's also mortgage loans out there to where you have to put up to 20% down or sometimes even more. Like if you're getting something called a VA mortgage loan, which is for people who are in the military, you won't have to put anything down. But if you guys are getting something like a non-QM mortgage, aka a non-qualified mortgage loan, something like a DSCR mortgage loan, then you could put up to 20% down. So it really just depends on the mortgage loan that you guys are getting. There's also FHA mortgage loans out there to where you could put as little as 3.5% down of the purchase price. And honestly, this is the most common mortgage loan that first-time homebuyers get out there due to only putting 3.5% down. So for example, if a property costs $200,000, then 3.5% down of that is going to be a $7,000 down payment, which honestly isn't too bad if you guys are trying to buy a home. But when you guys purchase a home, it's just not a down payment. You're going to have to pay closing costs as well. For those out there that don't know what closing costs are, these are pretty much fees that you have to pay to the lender once you guys close on your home, which are going to consist of origination fees, title fees, processing fees, taxes, etc. These fees are usually going to be anywhere between 2 to 6% of the amount you're purchasing a home for, but it's typically always 3% in a normal case scenario. And then as far as what reserves are, these mortgage lenders want to see once you guys actually do buy your home, do you have enough to take care of the mortgage payment anywhere from 3 to 6 months from now? So let's say, for example, your mortgage is $3,000 a month. You guys are going to want to have $9,000 in your account by the time you guys close on your property, so that way they can see 3 months of reserves. The only reason why mortgage lenders want to see this is so that way they know you're not at risk if they're going to be the ones giving you a mortgage loan. But now that you guys know what a down payment is, closing costs, and even reserves, let's talk about what the requirements are in order to get a no money down mortgage loan with Navy Federal. So first and foremost, you guys have to be banking with Navy Federal, because if you guys are not banking with Navy Federal, then you simply will not be allowed to get a mortgage loan with them. Secondly, you guys need a pretty decent credit profile, and you absolutely cannot have a high debt to income ratio. When it comes to having a decent credit profile, you guys need to have a decent age of credit, a good payment history, and a low debt to income ratio. And when I say low debt to income ratio, you typically don't want anything higher than a 43%. So for example, if you guys are making $6,000 a month, you don't want your monthly debt to be anything over $2,580 because that will exceed a 43% DTI. And then as far as your credit score, what Navy Federal and most mortgage lenders out there tend to do is take a look at all 3 credit reporting agencies and take the median score between all 3 bureaus. Now they don't solely base your approval just off a credit score, they do it off your entire credit profile and relationship that you have with them, but I personally would recommend to have a credit score of at least 660 or higher in order to get approved. Now if you guys want to receive the lowest interest rate as possible with this credit union when it comes to their mortgage loan, then you guys need to have a credit score of at least 720 or higher. And one thing I do want to add is whenever you guys get your credit pulled for a mortgage loan, you guys have a 45-day window to keep getting your credit pulled with other mortgage lenders out there without it affecting your credit score. So pretty much you would only have one hard inquiry, because these credit reporting agencies know that you're out here shopping for a mortgage and you're trying to get the best interest rate as possible that you possibly can. And just know getting your credit pulled is a requirement if you guys are trying to receive a pre-approval for a mortgage, because this is something you guys need if you're trying to buy a home. You guys absolutely have to be pre-approved for a mortgage before you guys actually start shopping for a home for these 3 big reasons right here. Pay attention. 1, you want to be pre-approved for a mortgage already, because most real estate agents won't work with you if you don't have a pre-approval letter, because at that point it would just be a waste of time and you guys would only be window shopping. 2, you need to know what your purchase power is, in other words the amount that you qualify for, because you guys can look at homes all day, but if you don't qualify for it, then it doesn't matter. But last, number 3, if you guys are not pre-approved for a mortgage and you end up finding the home that you want, then someone else is going to take it because they're already pre-approved and you're not. So you guys have to get pre-approved for a mortgage first before starting your home buying process. And some documents that Navy Federal is going to need from you guys, so that way you guys can start your mortgage loan application, is going to be a copy of your driver's license, social security, last 2 years of W-2s or 1099s. They also want your last 30-day pay stubs and most likely your last 2 months bank statements. Navy Federal will also be looking at all your different sources of income you got coming in, whether it's from your primary job or even rental property that you guys may have. They're going to look at everything. They're going to look at your retirement account, your savings account, investment accounts, everything. And then once you guys submit everything, the underwriter is going to take a look at your profile to see exactly how risky you are. Now, some things you guys should know about the Homebuyer's Choice Loan, aka the no money down mortgage loan that Navy Federal offers, is that not only are you not putting any money down, but there will also not be any PMI, no private mortgage insurance. For those out there that don't know what private mortgage insurance is, this pretty much protects the lender just in case you guys default on the loan for whatever reason and you guys stop making your payments. Anytime you guys get a mortgage loan for more than 80% and you're putting less than 20% down, you're going to have to pay private mortgage insurance up until you reach anywhere between 20 to 22% equity inside your home. And that private mortgage insurance bill could typically be anywhere from $300 to $400 every single month. But the good thing about Navy Federal and this particular mortgage loan is that they're not going to charge you any PMI, no private mortgage insurance, which is going to help you save money every single month. Now, some of you guys out there might argue that the interest rate is too high or your mortgage payment is too high since you're not putting any money down to bring that monthly cost down. But at the same time, too, you have to consider the fact that you're not paying any private mortgage insurance. Having no PMI is literally a perk that only people who are in the military get, because the people in the military are able to get those VA mortgage loans, and typically those VA mortgage loans are the mortgage loans that offer no PMI. So the Homebuyer's Choice Loan can be a really good mortgage loan for you guys to get if you guys don't have any money to put down. And yes, the interest rate is going to be a little higher, but again, consider the fact that you're not going to have to pay private mortgage insurance and you're not even putting any money down. Now, if you guys are going to get this no money down mortgage loan with Navy Federal, then there is a few things you guys need to know about it. So for one, this is only going to be for a single family residence, and it does absolutely have to be your primary residence. So pretty much what I'm trying to say is that it can't be a duplex, it can't be a triplex, it can't be a quadplex. It has to be a single family residence, and you yourself has to physically live there, otherwise they won't give you this loan. And also, the Homebuyer's Choice Loan is going to be at a fixed interest rate. So what this pretty much means is you're going to be making the same payment for the life of the loan, unless you decide to refinance or something like that later down the road. Now, there is going to be a one-time funding fee of 1.75% since you guys are getting this home without putting any money down, but there are a few ways you guys can pay this. You guys can either pay this up front, you can roll it into the loan, or if you guys want, you guys can actually increase your interest rate if you want, but I would personally recommend to just roll it into the loan, to be honest. Now, you guys can waive this funding fee if you guys want to, but at that point, you are going to be required to put 3% down of whatever the purchase price is. And to be honest, at that point, it's not even a no money down mortgage loan no more, so I personally would just roll that into the loan. Now, another thing you guys need to know about the Homebuyer's Choice Loan is that they actually allow you to have seller concessions all the way up to 6%. For those out there that don't know what seller concessions are, this is pretty much when the seller covers certain costs and fees when it comes to buying your home, like closing costs, for example. The reason why this is a good thing is because if you don't have any money to pay for closing costs, or you don't want to use any of your own personal money for closing costs, then you can actually use some of your mortgage loan money and add it to the purchase value, so that way the seller could credit it back to you. So for example, if a home costs $200,000 but you're pre-approved for a mortgage loan of $250,000, when you send your offer, instead of buying it for $200,000, you would buy it for $206,000. The reason why you guys want to do this is because 3% of $200,000 is going to be $6,000, so the seller would still receive his $200,000, but he's just giving you the $6,000 back, so that way you could take care of your closing costs. Now, this doesn't happen all the time. You guys have to get a good enough real estate agent who can negotiate this for you, but if they do negotiate it for you, you guys are getting a home without putting any money down, no private mortgage insurance, and paying no closing costs as well. So really, ladies and gentlemen, if you guys have a good credit profile and you have pretty decent income coming in, you guys can literally get into a home without spending any kind of money. There's not going to be no down payment. There's potentially not going to be any closing costs, because again, closing costs are usually going to be about 3% of the purchase price. But in this case scenario, Navy Federal is allowing you to have up to 6%. The only thing you guys really need is reserves. But to be honest, you could actually receive this from one of your family members or friends. Let me explain. When you guys close on a mortgage loan, like I said earlier, they're going to want to see something called reserves, and all they want to see is the money in your account. So if you guys don't have the money in your account, then you guys can simply ask a friend or family member to put it in your account, and then once they're done looking at your account, then you can give it back to them. Now, another thing you guys can actually do with seller concessions is buy the interest rate down, which is a very common thing when it comes to seller contributions. But another thing I do want to mention about the Homebuyer's Choice Loan is that they have something called a guaranteed rate match. For those out there that don't know what this is, pretty much if you got pre-approved for a mortgage with Navy Federal and you locked in your rate, you guys have about 3 days to find a better rate. If you guys found a better rate out there than what Navy Federal is offering you, then Navy Federal will either match the rate, or if they don't, they'll give you $1,000 after you close with the new lender. And this is going to go for both purchases and refinances, but if you guys want more information in regards to this, it's in the fine print on their website. Now, one thing I do want to let you guys know is that if you guys get quoted a good interest rate with Navy Federal and you feel in your heart that it's a good interest rate, then ask the mortgage lender to lock it in so that way the rate doesn't change. Because if it does go higher, then you're going to be paying more over the course of the loan just for borrowing money. Or you'll even qualify for a lesser loan amount now to buy a home. So in other words, if you have a higher interest rate, then your pre-approval amount is going to be less than if you were to have a lower interest rate. Now, one tip I do want to leave you guys with before I end this video is that if you guys are going to purchase a home, do not make any major purchases before purchasing your home. Because if you guys make a major purchase on your credit card, or you get like an auto loan or personal loan or something like that, then now you're going to have a higher DTI. And if you have a higher DTI, ladies and gentlemen, this is going to affect your purchase power because now you have more debt, and then also it can affect your credit score too. I've seen plenty of people out there make this mistake before, like they finance a new car right before they're about to purchase a home, and now they don't even qualify for the home no more. So please don't be that person. Now, I know a lot of you guys out there are probably going to say something like, oh no, this mortgage loan isn't for me. The interest rate is too high. I didn't even put any money down. So can you imagine what my mortgage is going to be every month? And while all that might be true, you still have to consider the fact that you're not putting no down payment and you're not paying no private mortgage insurance on top. And not only that, this is actually going to help you guys get into a home sooner rather than later versus waiting like months or even years. But that's going to wrap it up for today's video, guys. I hope you guys found value in any of this information as always. And if you guys have bad credit because maybe you have derogatory items on your credit report, like late payments, charge-off collections, or even past bankruptcies, and you've been working with somebody who couldn't get that off for you, send an email to one of my business emails, 850boulevard@gmail.com, because I have an amazing credit repair person that I personally work with that can definitely help a lot of you guys out there. And also really quick, if you guys are looking to get funding for your business, like anywhere from $50,000 to $150,000 plus in capital, so that way you guys can actually scale and grow your business, send an email to my business email, justmoneyish@gmail.com, saying funding, and I'll speak with you guys there. But if you guys made it to the end of the video, then I truly do appreciate you guys. We're at 82,138 subscribers at the time of this recording, so I do appreciate all who watch. I do post weekly videos for those that don't know, but if you guys haven't yet already, don't forget to hit the like button, subscribe to the channel if you guys haven't yet already, and don't forget to hit the notification bell so that way you guys get notified every time Ish post a new video. And again, we talk about personal and business credit, real estate, and other financial related topics. So if that's something you're into, then you're probably going to want to consider subscribing. We talk about how to get high limits on your credit cards, how to boost your personal credit, how to obtain business credit. We talk about real estate. We talk about mortgage loan programs. We talk about all that. So this is your one-stop shop. Thank you guys so much for watching, and I will see you in the next video. Thanks for watching.